welcome to special coverage of Earnings Edge. I am your host, Hiral Dadia. First, let's quickly take a look at how markets are panning at this hour. We are below the 21,300 mark as we speak. Cuts of around 0.9% coming in there. For majority part of the day, we have remained in the negative, and overall, we've hit a low of around 21,247. If you see in terms of the Sensex as well, almost 675 points is the kind of cuts that we're tracking in today's day of trade. Bank Nifty as well, around the cuts have been deeper, 1.4% downtick. So there is absolute underperformance coming in from the financial names vis-a-vis the benchmark indices, and nearly below the 44,500 mark in terms of Bank Nifty. Let's quickly take a look at what's happening with the broader markets as well. If we can pull up the mid-cap and the small-cap index, cuts absolutely in the similar range. So the broader markets are mirroring what's happening with the benchmark indices in trade today. If you see the advanced decline ratio as well on Nifty 50, 34 declines versus almost 16 advances coming in. And stocks like Tech Mahindra on the back of earnings, that is down 6.5%. Cipla has been trading under pressure, 4% cuts coming in on a Cipla today. There's a press conference as well with the management of Cipla, so there could be some bit of clarifications that could be coming in there. Axis Bank is down, SBI Life has been trading under pressure, HDFC Bank is also seeing cuts of 2.5%. Let's pick up our ICICI Lombard and see what's happening with the ICICI Lombard in trade, as well as the Aditya Birla Capital, because if you talk about the health insurance companies, with the latest news wherein health insurers will have to comply with cashless, even with hospitals which are not on the TPA will have to do a cashless. And I think probably that's creating that kind of pressure in today's session, because cash flows could be something which could be impacted. What's standing out? Bajaj Auto, 5% up move coming in on that counter on the back of the earnings. We did speak to Rakesh Sharma as well, who's clearly indicating that the domestic demand has been good as well. NTPC is another one. Ahead of numbers is up in trade. Adani Ports, Indocent, as well as the Coal India. These are a few of the other names that we have been tracking. But one company that reported numbers is a Tata Steel. We'll get you the full chat with the management of Tata Steel shortly. But before that, let's head across to my colleague Anushi, who will tell us how the quarter has been so far and what are the other details that she's been tracking, because the stock is now down almost 2.3%. Anushi, over to you.
Tata Steel, quite the expectation of the company returning back to its profit with the large impairment charge it had in the earlier quarter as well as the last year. So, but however, it still remained to surpass its expectation of about 1,600 crore of net profits. Even if you look at the revenue was also down by 3% against the street estimates of about 1 to 2% of an increase in its revenue. So this was weighed down by the company's UK operations and the Netherlands operations, which failed to gather the momentum. Now, if you look at the EBITDA was up about 54% at rupees 6,200 crores. Now, along with this, there was some margin expansion of about 423 bips to 11.32%. It is to be noted that this was on the back of higher EBITDA per ton realization that the company had. So the EBITDA per ton increased about 110% to rupees 8,035. compared to the 3,800 it had earlier. Along with this, it was also supported by the increase in steel prices, which led to this increase in profitability. However, now if you look at the production, India's production did see about a 7% uptick, while the deliveries also increased about 3%. But again, what remained as a monitorable was the UK operations, which failed to gather that momentum, because of which the consolidated production was flat. Segment-wise highlights, again, India remains strong. In other key updates, the Tata Metallics has set Feb 6 as its record date for merger, with 79 shares exchanged for every 10 shares held for Tata Metallics. So that should be noted.
Right, so that's an interesting one coming in with regards to where Tata Steel goes, especially taking into consideration Tata Metallics as well as Tata Steel, the kind of arbitrage opportunity that existed as well earlier, that has gone down. But overall, if you go to see, it's mainly the European business which has been under pressure, and the 6th of Feb has been fixed as the record date for the merger with Tata Steel with regards to where Tata Metallics is concerned. Now, let's head across to my colleague Sajeet Manghat, who's speaking to TV Narendran, the CEO and MD at Tata Steel, to decode their earnings.
The demand has been pretty strong in India. If you see the steel consumption in India, so far this year, it's grown at around 10% compared to the previous year. So we are finally seeing steel consumption grow at a rate faster than the GDP growth rate. It was expected given the focus and the spend on infrastructure. Globally, demand has still been a bit fragile, particularly in Europe. The European continent is still recovering from the aftermath of COVID and the Ukraine war, and which is ongoing. So there, the demand growth has not been so great. But over the last few weeks, we've started seeing prices creeping up in Europe because of the fact that material which used to flow through the Red Sea and Suez Canal has got disrupted because of it.
We've seen that in the last quarter, some form of happening in the raw material prices, coking prices, coal prices have gone up by 20%, and equivalent increase in iron ore prices as well. Is that going to have an impact going forward for you?
So iron ore doesn't have an impact for us in India because we have our own iron ore. But in Europe, yes, we buy iron ore. Coking coal has an impact for us both in Europe and in India. Coking coal and iron ore prices have been going up globally because the Chinese steel production is still strong. So they're buying the raw materials that they normally buy, if not more. And because they are producing more but consuming less, they're exporting more, and which is why international steel prices have got impacted. So it impacts us in the sense that the spreads reduce. But we do see, like I said, steel prices responding to rising raw material prices and hence creeping up in Europe and, of course, in India as well.
How do you see Chinese exports scenario? Because they've been exporting 7 to 8 million tons per month, and I think that's going to increase going forward as China looks at a soft landing or gradual build up of demand. How do you see that impacting prices in 2024?
So I do believe that it's pretty close to the peak. If you see, it's been at this level for the last few months. It has not gone beyond, it went slightly beyond 8, maybe in July or August, and after that it's been slightly below 8. Obviously, that's higher than we would like it to be. I think ideally China should be exporting around 5 million tons, and that keeps the balance in the global markets. So I do expect them to be at this level for a few more months. And then either they'll have to cut production because the profitability of the Chinese steel companies is not great, or demand in China has to pick up and help them in the profitability.
If I look at your consolidated EBITDA per ton of 8,800 odd, that's a good number comparing quarter on quarter and year on year. Is there a headwind to this EBITDA per ton coming in because of global one, demand being suppressed, and second, raw material prices inching up?
No, I do believe this will actually improve because we've had a few bad quarters in Netherlands because we had only one out of the 2 blast furnaces operating. The other one was down for relining. That blast furnace is coming back to production next week. So we do expect the volumes to grow in Netherlands, and hopefully Netherlands over the next few quarters will come back to certainly the production levels that we've seen in the past, and we'll also start seeing the negative become positive. So that will certainly improve our overall EBITDA per ton. UK continues to be a challenge. The restructuring there will at least take 6 to 9 months from now. So the benefits of the restructuring in terms of cost will be visible to us only next year this time. India, demand continues to be strong, so we expect the numbers to be quite resilient.
In the UK front, what I understand is that you will have to shut down the furnace so that you can do the transition to a more green furnace in that sense. And what is the kind of impact that you're going to take because of the complete shutdown, because you won't be able to run the furnace along with the change in the operation and the technology that you're bringing in?
So we've already impaired the going on with the unions. We have said that the expectation is we will have a reduction of about 2,500 within the next 18 months. So that's a discussion going on with the unions currently.
And is there any cost attached to it? Have you come out with what kind of one-time cost that would be there because of that?
It's all part of the 1.25 billion pound plan that we announced for the transformation of UK.
What about Netherlands? Because I understand you were in touch with the Netherlands government Dutch government as well in the for a negotiated package there for where are we on that and and what time frame do we have for that restructuring happening through the Netherlands unit?
So Netherlands, the conversation is going on with the government. They have recently had an election. So we are waiting for the new government to form, which may take a few months. And once the new government is formed, we hope to take this conversation to a conclusion.
Sir, how do you plan to scale up the domestic production? Because Kalinganagar is also coming up and is going to be up on a phased manner. So by when do we see the entire 5 million ton coming up from Kalinganagar?
So Kalinganagar, many facilities have already been commissioned, and the rest will get commissioned in the next 12 months or so. So the blast furnace will get commissioned or will get completed in the next few months, and commissioning the production should start soon thereafter. So we will see some volume benefits in the next financial year. We will give you the exact guidance when we do the next quarter's results. But over the next 2 years, you will see the volumes ramp up to 5 million tons, which is the capacity that we are setting up.
You're also looking at a consolidation of the entire India arms. You have done swap ratios have already been announced for that. Once the entire consolidation comes into play, how is it going to work for you on the ground level, especially downstream and from various other segments which many of the units cater to?
Yeah, so this is part of our simplification journey, where we had a number of subsidiaries, some listed, some not listed, and we are merging it into Tata Steel. We had said last year when we started that we will complete the process during the year. I think most of it is complete. Most of the companies, I think, with the exception of TRF, have already gone through. So TRF is the only one which is left in that sense of the term, which also will happen over the next few months. With this, obviously, all of them will become divisions in Tata Steel. Even today, we have a tubes division, a wires division. We have multiple divisions in Tata Steel. So they will have that similar structure. They will all be divisions of Tata Steel. So the focus will be there on their markets, their customers, the bottom line. But we will not be incurring unnecessary costs just because they exist as a separate legal entity or as a listed company.
What is the kind of synergies that are going to come in because of that?
I think when we announced this restructuring, we had said that there's about 2,000 crores of synergy benefits coming out of it. And all the companies put together.
Many of them already being integrated into Tata Steel. Have you started getting that synergies?
Yes, it's early stage because most of them have started coming in the last 3 months and over the next 3 months. So start seeing the benefits from next year.
You have an aggressive plan of doubling your capacity. Can you take us through how do you want to do it, at what level, and which are the segments that you're focusing as you move towards that?
I think what we said in the past is the opportunity exists for us to grow Kalinganagar, which is currently at 3 to 16 million tons, because we have almost 3,500 acres of land available there. The first phase is, or rather the second phase is moving from 3 to 8. The phase after that will take it from 8 to 13. So the plans are being developed and we will discuss with our board. The other opportunity for us is the Neelachal acquisition, which we did, which is already running at 1 million tons, the full rated capacity. First stage, we will take it to 5 million tons, and thereafter you can take it to 10 million tons. Then in the Bhushan plant in Meramandali, we are already at full capacity at 5 million. We think we'll take it to about 6.5 million in the first step, and after that you can take it to 10 million. So these are the growth opportunities in existing sites that we have. In addition, we are setting up electric arc furnace facilities. The first one is being set up in Ludhiana, and we will set up subsequent ones in the south and west as well. So the opportunity is there. If you add up all these numbers, including Jamshedpur at 11 million, you will see that we can cross 40 million, but we need to face it in a manner that, we are comfortable with, our board is comfortable with, and of course, our balance sheet is, continues to be robust and resilient.
How do you see your cash flows, helping you in reaching that 40 million target? Will you be able to get enough cash flows? Because currently your net debt is around 77,000 crores. Yeah, so how do you plan to do that?
So, the India business, if you see the numbers, India business typically has very strong cash flows. And as the India business grows, it will generate enough cash flows to take care of most of this growth. We also believe that even if we stick to a net debt to EBITDA target of 2, we can still finance these growth plans.
How do you plan to bring down the net debt to EBITDA? Because currently it's at 3.23. your target is to bring down to below 2.5. So, is there a way to deleverage some of the debt as well?
Partly deleverage, and also we expect the EBITDA to improve as the Netherlands operations comes back to profit.
And how do you want to deleverage that? Is there equity raising which you may have to do?
No. I think deleveraging through generating the cash flows from the business, and as a Kalinganagar expansion comes, we will generate more cash flows, which can help us deleverage.
Overall, when you reach the 40 million from the current capacity, what is the kind of capex that you will have to spend over a period of time?
I think too early to give you a number because that is being worked out. But typically, you will see that in steel business, it is anything from 4,000 to 6,000 crores per million tons.
Okay, and that entirely will be done through cash flow currently.
That is our expectation.
And this is spread over what is it's a 5-year target or 10-year target that you will be able to do it, or you're going to pace it with the cash flow?
We'll pace it with the cash flow.
Okay. My final question to you is, sir, you've seen demand sluggish in the European markets, with UK and Netherlands being big units for you. How do you see demand revival happening? By when do you see the revival happening there?
So Europe, is not really going to be a growth market. What we are expecting to see is demand go back to the levels that we've seen in the past. That's why we are not adding capacity there. There, the focus is on transforming existing capacity to greener process routes. So there will be some sort of revival if the war in Ukraine comes to an end and there is reconstruction there. But I also see that a lot of manufacturing activity which got impacted by high energy prices over the last year or so is slowly coming back to normal because energy prices have dropped down to long-term levels. So we do see a revival of economic activity. If you see the forecast for European GDP growth, this year is expected, this calendar year is expected to be better than last year, and the next calendar year is expected to be even better than this year. So we will see a gradual recovery of economic activity, not significant growth.
Mr. Narendran, it was a pleasure talking to you today. Thank you very much for joining us on Earnings Edge.